Greetings, everyone. I'm excited to welcome Michelle Valentine, co-founder and CEO at Anrok. Michelle, welcome.
Excited to dive in.
Yeah, excited to have you here, talking tax and your journey. But first, tell us a little bit about your background.
Yes, I'm the co founder and CEO at Anrok. We help software companies with tax compliance, specifically US sales tax and worldwide VAT. What brought me to this journey is that I used to be in venture capital, investing in early stage startups, and spent a lot of my time thinking about what makes an attractive market, what makes a durable business. And when I came across the tax problem, it blew my mind that this is a new problem, that it impacts every software company out there in a new way. And we can get into the reasons why and what changed. But that is what brought me to founding Anrok today.
Yeah, and your background, investor, looks like maybe some investment banking as well, so the finance world. Yeah, so really interesting because tax, a complicated subject, must have. And so in your journey prior to founding Anrock, was there just did a light bulb go off, or were you always thinking about this, to enter the tech space? Where did the idea come up in your journey?
It's always easier to connect the dots backwards. Funnily enough, when I was at Goldman Sachs in the investment banking group, I was part of the municipals group structuring debt around tax revenue. So I would work with the CFOs at the city of Atlanta, for example, and thinking about how do you take a sales tax revenue stream, structured debt around that, and be able to borrow money for local projects. And so when I came across the sales tax problem in the startup and software arena, I had sympathy for both sides. On the one hand, governments really need this revenue. On the other hand, these rules are really difficult to follow, especially if you're a software business and your customers are all around the US, all around the world. You're not selling out of a physical store. And a lot of the rules are built for that retail world. And so I think that combination of background led me to feel very passionate about this space. And it was more about the idea than it was to really want to start my own company that led me to Anrok.
Yeah, appreciate that background. That makes a ton of sense. So tell us a little, let's talk about Anrock and let's start, because you and I kind of, you live this as a CFI, I live this in tax, but let's just not assume here because there are a lot of taxes, right? We've got payroll tax, we've got entity taxes, and of course we have sales and use tax and VAT. So tell us a little bit about Anrock. And then of course, like what type of tax problem are we trying to solve here?
We focus on tax on revenue. And if you think about traditionally as a business, when you start a company, you need to think about employee withholding tax essentially from day one. You need to think about 83B elections and all of that stuff around equity. And sales tax is something that now you need to think about the moment you start to generate revenue. In the past, if you are a software company based in California, California does not tax software. And given your physical presence was really only in California, you didn't need to think about sales tax. The two things that changed this was one, in 2018, there was a Supreme Court case called South Dakota versus Wayfair. And that introduced a concept called economic nexus. Essentially, governments woke up to the fact that a lot of the economy is now online. You might never have a warehouse and office in their state, but you might be generating millions of dollars of revenue in their state. And so now there is a revenue threshold, sometimes a transaction threshold in many states across the US. An example is the state of Washington, where there's a $100,000 revenue threshold. If you cross that in a year, you now need to collect sales tax on every sale to a Washington customer going forward if your product is taxable. The second big thing that changed was really the rise of remote. And when we saw this in 2020, that's really the reason why we jumped up and down and decided, hey, now is the time to start Anrok, where companies went from having a single office or two, often in California, to employees moving remotely, moving back home, maybe hiring across different states. And that also impacts sales tax. So this touches on the traditional concept of physical nexus. The moment you have an office or even a single remote employee in a state, that triggers an obligation for the business to collect sales tax on revenue in that state. So those were the two things that really changed the game for software companies.
Yeah, and just a lot of track there, and especially in the US, just so many like all the state tax laws so different, and I won't get my soapbox there for the tax systems on revenue in the US. But you know, I want to ask, I have my thoughts on this, but tell us like why should founders care about tax on revenue?
Tax on revenue impacts your revenue on a business. If you don't collect sales tax from a customer, your business is still accruing liability and on the hook for that tax amount that you would have otherwise collected from your customer. So if you think about the typical purchase you might make, maybe you went to Starbucks this morning and bought a cup of coffee, or maybe you bought something online over the weekend. You, as the customer, paid sales tax on that amount. And typically, consumers are price inelastic because you see sales tax on every single purchase if you're located in a place that taxes that product. And people often forget Amazon not that long ago didn't charge sales tax on their sales. If you think back, in 2010, 2012, there was still a lot of states Amazon was not collecting sales tax in. And now it's commonplace in e-commerce, whether you're a big behemoth like Amazon, maybe you're a small SMB e-commerce company, they all collect sales tax. And that wave is really hitting software companies today. And so the main thing to think about as a CFO, as a founder, is that even if your team is not looking into sales tax today, there still is a monetary impact to your business that will catch up at some point. And this is composed of one, the sales tax amount that you would have otherwise collected from the customer, and then penalties and interests on top of that is accruing. So those are the things that we try at Anrok to make super simple, because you as a business should never have to pay out of pocket that a consumer that is price inelastic to.
Right. Yeah. There's nothing scarier than an entity, a state reaching out and, hey, I see you're doing business here. Let's talk tax. So that scares every CFO out there. So, and I'm sure you've seen in your inbox, I see in my inbox, we know Amazon, right? That big switch collecting sales tax. And now you just see in your inbox now from your, products you use, services you use, it's like, oh, hey, by the way, I see you're in Colorado. We now have to collect sales tax there where I'm located. So you're seeing those come up more and more. And sometimes, oh, it's a surprise. Tax on that. Okay. Makes sense.
Yeah.
So tell us,
Actually,
yeah. Oh, go ahead.
Actually, on that note, it's very timely. Just the other week, GitHub announced that they were collecting sales tax on their invoices. And a lot of developers on Twitter were like, wow, GitHub is only doing this now. If GitHub is only doing this now, we don't need to think about sales tax. And what they don't realize is GitHub was probably compliant and just paying the tax out of pocket and didn't make that switch. And so whether or not you're seeing businesses starting to send emails and collecting it from the customer, if they're a big enterprise, they're probably doing something behind the scenes to make sure they're compliant. I'd be very surprised if a Microsoft-owned entity was simply accruing those liabilities on top of the sales tax rate. They probably were remitting the sales tax to avoid the penalties and interest. And when they got their systems in order, then rolled out to the customers and sent that email notification. So that's something that we've seen probably in the 4 years Anrok has been around. We've seen Spotify do this. We've seen Rippling do this. We've seen Peloton do this. So all of these very much like email notifications saying, hey, please update your address because we're collecting sales tax.
Yeah, definitely. And for the founders listening, because if you're going to exit, you're going to fundraise, right? That's going to be on that due diligence list, sales and use tax fact compliance. Why are where are you remitting? Where are you not remitting? Why you're not remitting? So that's going to come up. So you can't escape it. Even if you're just kind of putting your head in the sand for now and ignoring sales tax. So yeah, definitely. So
And the other place it comes up is also exit opportunities. So not just at a fundraise, but also in an M&A
mm,
process where that's usually an escrow item or something that the acquirer will look into and say, hey, you haven't been paying this. We don't want to take on this liability. That's going to come out of the acquisition exit. So that's another place where, it shouldn't come up so late. And so I'm excited to really partner with businesses really from day one when they're generating revenue, so they can really protect their bottom line.
yeah, definitely. You don't want this as a surprise in an exit when you're looking for that nice valuation on your SaaS companies. So Michelle, tell us what's your industry ISP? Are you going after software companies, manufacturing? Like what industries are you after with Anrok?
We focus on the digital economy. Within that, there's a lot of heterogeneity that people don't realize. So it's not just SaaS, but there's also security companies, there's also digital goods, ebooks, streaming, gaming. There are so many different flavors of software companies. And what's exciting to me is that we've really embraced and seen the developments of software eating the world. So many more businesses are becoming digital. You might have a blend of hardware and software. And so these are all companies that Anrok works with.
Yep, and I help SaaS companies. I've seen that the combination of software plus hardware play, and yeah, not uncommon. So the digital economy, software companies, security, digital goods, and so on. And what about the persona? Are you going after the CFO, the founder? Who are you trying to reach within these organizations?
Typically, it's the finance leader, and it can be a controller, a tax hire. Often the CFO is someone who cares enough about just knowing this is being done. Rarely are they the main user of the product. I think if you're a CFO, the main thing that you want to be helping guide your team with is choosing a solution that can scale with your business and ensuring that, hey, we care about US today because maybe that's 60%, 70% of your sales. But I also care about a tool that will help us go global and connecting that with a business strategy. So I would say finance leaders, tax controllers, accountants, and then CFOs often get pulled into the decision to make sure the strategic alignment is there.
Yeah, yeah, definitely. And finance and accounting leaders out there, it's on us, right? We own that. We don't want to look bad down the road if we are ignoring sales tax. Not a good look. So tell us, Michelle, what year did you found Anrock?
2020. So it
Okay.
was the depths of COVID and
Yep.
really the rise of remote and everyone working from home, which I'd say impacted software companies the most because it was the easiest way to work from home. And that was a big trigger for us to start the company. And something unique about our approach is that we allow you to track remote employees in the product. So we connect with your HRIS system and we can alert you, hey, your engineering team has hired someone remotely in the state and hey, they tax your product. Do you want to register? So just being very proactive in real time, given the reality that many of our companies will continue to be remote as we've come out of the pandemic.
I love that. Yeah, I'd rather be proactive internally than the state or entity reaching out to me and say, "Oh, by the way, you have an employee here." So the very relevant next question, because we've talked about Nexus and thresholds and physical presence, but where are you located? Do you have a headquarters or are you virtual?
I'm located in San Francisco. We do have an office in the city, and our team has a hybrid remote setup where we do have employees across the US as well.
Okay, perfect. And then what's your current team size?
With 60 people.
60.
That's right.
Oh yeah, that's a good size. That's great. And anything you want to share about revenue ranges, AR range, or just general scale of Anrock?
What I can share is that in the past year, Anrok managed tax compliance for over $7 billion dollars of customer revenue. So, pretty exciting scale that we're seeing. And I think tax becomes a problem as the company grows. It's more complex. The cost really is getting tax wrong. And so, something pretty exciting to us is keeping an eye on the total assets that we're managing compliance for.
Yeah, definitely. Yeah, that's a lot of revenue flowing through. And like anything, I think a lot easier to get started earlier rather than later. Just much more complex to do this, but still necessary. So tell us, so going after that digital economy, CFOs, controllers, finance, accounting, tell us a little bit about your go-to-market motion. How are you finding your prospect?
It's actually pretty interesting because
Mm.
we have the classic portion where we go direct and work with the finance leaders and they come inbound or we go outbound to them. But we also have a pretty unique partnership motion where we work with accounting firms, fractional CFOs, where we have several partners that have referred dozens of their clients to us. And the reason is that the software can take transactional data, often from different sources, do that data transformation that's often done manually in spreadsheets that the fractional accounting firm or the CFO has to do. And we do that data manipulation. We present it in a way that they can do the analysis very quickly and provide the strategic advice on top of that. And so that's been a really symbiotic partnership working with accounting firms and fractional CFOs.
Okay, love that. So inbound, outbound, plus just that partner channel model to reach out to those who are, living the sales tax compliance every day. And let's switch to the fundraising side. Really interesting journey so far. So really looking forward to your insight here. Raise the seed round, and correct me if I'm wrong, raise the seed round 4.3 million, series A of 20, and then series B of 30 million. So over 50 million raised so far. So tell us, what I guess, kind of the milestones, triggers that led to this, but I think it'd be really interesting to hear kind of your perspective on, what were those triggers to say we're ready for a seed, then ready for a series A, ready for a series B? Because founders always think like, well, am I ready? When should I raise? How do I know? So I'd love to hear your journey through that fundraising process.
Anrok has been fortunate in that we've worked with pretty incredible investors from day one. So, as you mentioned, Sequoia, Index, and now most recently, Khosla Ventures. And to me, the quality of the firm and the quality of the partner matters so much. I was just advising a mutual friend this week on their seed raise, and their priority was let's get this done quick. I want a 2 week time frame and I want great terms. And I've lined up 30 meetings in the next week. And it's useful to get to know a lot of investors, especially if you don't have a network. But I would prioritize the quality of the founder, the quality of the partner, and quality of the firm over speed, because these are people you're partnering for the long run. And so when I think about a fundraise, I would almost give yourself a month before you actually kick off the raise to start meeting the investors if you don't know them already. One other thing that we've done well is really think about how the metrics tell our story. And so I think this group really likes thinking about metrics. I think that's something very special about this community. And the thing that I do is tend to focus on 2 or 3 metrics that tell the story of Anrok today, as well as the potential for tomorrow. The big shift in the last year or two is not only do you need to think about revenue growth metrics, but also make sure in that narrative you include 1 or 2 efficiency metrics. So this can be anything from CAC payback, net dollar retention, burn multiple. Those are things that as you go talk to investors, you might not want to share all of your metrics at once, but really know those 2 to 3 metrics that tell the story of why your business is on fire.
I love that. You're speaking my language now, assess metrics. So growth metrics, of course, and then efficiency metrics. We have CAC payback, LTV to CAC, cost of ARR, and so on. So yeah, and I recently interviewed another founder who went through a Series B, and they said, yeah, the science of metrics at that point. And it sounds like you find the same story where you're still telling your story, sharing your vision, but now you've got to support it even more with data and metrics, especially at that Series B point. Does that sound correct?
That's completely right. I'd also include not just the science of metrics, but even at the Series B, there is an art to looking at metrics. As someone who was in VC investing out of both the early fund and the growth fund, often it takes extra nuance in understanding the business to figure out exactly how to calculate NDR. And I'll give you one example. For a consumption based business, do you compare month 0 and month 12 to when the customer like first activated on your platform and their consumption in the first month? Or do you want to compare it to what you estimated their consumption to be in the first year to what it actually was at month 12? Like, what is the right way of looking at NDR for your business? And often there is no perfect answer, but there is probably a directionally more true way of presenting the metric for your business.
Yeah, I love that because that's what I teach in my SaaS metric core. It's like, yeah, the formulas can be pretty straightforward, but the nuance, how are we applying this to our business? Because there are always nuances on how we actually apply that metric correctly to our business. And you mentioned consumption usage. Just, quick question here on pricing. So are you pricing kind of on that usage-based model, or is it more of a fixed MRR ARR contract?
Ours is very similar to Shopify. So if you're
Mhm.
familiar with a Shopify platform, there's a platform access subscription. And then there is a usage based component. Given there is a fintech component to Anrok, we're moving money. There are things that we need to think about where there is some risk in getting tax wrong. And so there's both a subscription component and a usage component as well.
Okay, yeah, that makes sense. And you shared some insight here on your fundraising journey and those the focus on metrics and that founder investor fit, the quality of investor, and thinking about your journey, from the start seed to Series B raising over 50 million. For the other founders listening, any lessons that just stand out, as you went through that fundraising journey that could be helpful to other founders thinking about a seed or A or B?
Yes. So a few things. Maybe to expand upon that, give yourself a 1 month buffer insight. The way that I would frame it is to say, hey, we're planning to raise later this year, right? Maybe even give yourself a quarter if you have the runway and not have to actually go out to raise when you go raise. And time box those investor conversations. Talking to investors can be a distraction. Some people get energy from it, some people get drained. You do get grilled even in a very casual coffee chat. And so, what I'd recommend is before you know you want to raise, try to time box some of those meetings a month or two before. And then that should give you the confidence of, am I hearing the right pattern of questions? Do I think I have the story that would appeal to investors to actually start pitching in a month's time? So that's lesson number one.
Mhm.
I think lesson number two is there's often a question of, do I want to be preempted or do I want to run a process? Anrok has been, both of our last rounds were preemptive. While that's worked out for us, I do think often the rule of thumb is you want to run a process because you then talk to, 12 investors at once instead of two or three. And that really provides that optionality when the time comes because not all investors will be interested and get your business. And so, despite that working out for us, my advice would be to stick to the process, stick to the amount that you plan to raise, when you want to raise, when you think the business is going to raise. Because if you do it on an investor's timeline, there's probably other pressures that you're not realizing. Maybe they have a big vacation coming up. Maybe they have parental leave coming up, right? They might be leaning in for reasons that might not be optimal for your business. And so, really just focusing on keeping the timeline, keeping the amount you want to raise, and staying true to that. One last thing I'll add to the amount raised. The reason why that's important is once investors decide, hey, your business is great, I want to invest, they probably then have to figure out how the returns work for their fund size. And so they might come back to you and say, hey, can you raise a bit more or can you raise a bit less? And if you are consistent with the amount you want to raise, I think that will actually help you keep your business's long term interests front and center. Maybe be flexible for the right investor, but make sure you're not raising too little because you're optimizing for dilution and their fund structure versus, what you need to get the next round.
Yeah, appreciate that insight. And with those round sizes, is there any art and or science with say a 20 or 30 million, or I had a number in mind? Anything you can share there?
A few things. So it's useful to make sure that each round you're raising a little bit more than the last round. And that's really optics and a message sending to the market that the business is doing well. And so if you're planning to raise a giant mega round of like 100 million out of the gate, keep in mind that you will probably want to be raising more at the next round and thinking about how does the timing work? How do our milestones fit into this? So that's one. I'd also say the other thing to think about is the time between rounds are now changing. I think in the heyday, they were, sometimes less than a year between rounds. And now it can be closer to like 3 years between rounds. And so being clear of, what are the expectations in the market? Where do we need to land in a few years' time is important.
Okay, great insight. Appreciate that. And so let's say you talked about a few metrics before, say efficiency and CAC payback and retention. So do you have a favorite number or metric or metrics that you're focused on today to manage Anrock?
Currently, I like the magic number
Mhm.
because it's been so useful for me operationally to think about what is the upper bound in marketing investments now that we've raised a new round of funding. And nuance was something to note, and I'd love to hear your perspective on this, Ben, is people don't look into the equation as much as they should to understand what is the numerator representing. And so to break down the magic number equation, the numerator is current quarter's revenue minus previous quarter's revenue multiplied by 4. And what that really tells you is the annualized gain. that you're getting as a business for the denominator, which is last quarter's sales and marketing investment. And what people often miss is the numerator should be a monthly recurring revenue number, not annualized. That's why you're multiplying by 4. And if you don't pay close attention to that, you might take the annualized number and multiply by 4 and really get a number that might not be that representative when you compare it to benchmarks in the industry. I'm curious what you've seen and how you've seen founders and CFOs go wrong.
Oh, definitely. I think, that's, that's the formula, and again, nuances. And I think, it's the interpretation also with the magic number, because, as a CFO, I like to push hard on sales and marketing. Hey, be efficient with CAC payback and cost of ARR and LTV to CAC. But, with the magic number, it's revenue. It's total, it's that revenue stream. So think about your MR waterfall, new expansion, contraction, churn. It's measuring all of that, where, say, traditional efficiency metrics, CAC payback, is just new acquisition. So I say it measures more than just, go to market motion, but just everybody who touches revenue in your org. So yeah, appreciate that insight. So magic number, popular. Any others that you're looking at right now?
I think CAC payback is a useful one as well,
Mhm.
and just making sure that it stays within, let's say, depending on your business, it could be 12 months, it could be 18 months. I think in the past, investors have been very comfortable with SaaS having like 2-year paybacks. I would say that's probably shortened a little bit now. And so that's one to keep an eye on.
Okay. So magic number, CAC payback. Yeah, CAC payback. Yeah, popular investor and operator metric. So Michelle, appreciate your time today as we wrap up. Tell us what's coming up next for Anrok.
Two things.
Yeah.
So, one, you have to be thinking about how AI impacts your business and also how it is embedded in your product. And so, one thing we've done, and this is the start of many more to come, is embedding LLMs, specifically multimodal LLMs, into Anrok, where we can take your customer's tax exemption certificate, we can ingest that, extract the information, and automatically input that into Anrok. And so the alternative world is you'd either have someone on the team manually taking dozens, if not hundreds, tax exemption certificates, inputting that into your system, or using traditional OCR methods, which are brittle and less flexible and often break. And so that's one example of how Anrok is applying AI to supercharge finance teams' workflows and get money back and also enhance accuracy. So that's the first thing. The second thing that I'm excited about is we launched our global VAT GST product a few years ago. The thing that's new that we've been focusing on in the last 6 months is really expanding the ability for really large enterprises that have local selling entities in countries like Australia, Canada, and many more that are invoicing out of those entities, so specifically selling entities, to be able to use Anrok as well. And within one platform, you can toggle between your different entities and manage it all in one place. So very excited about those two developments and continually growing that side of the business.
Yeah, looking for it. And yeah, that's fine. Yeah, about sales tax certificates or exemption certificates. Just make sure you collect them too. So I love that LLM coming in now. So Michelle, really appreciate your insight, sharing your journey. If listeners would like to learn more about Anrok, where should we send them online?
We have a very active LinkedIn presence. So at Anrok is our handle. We also have a Substack in which we interview CFOs. I'm sure we'll do a write up on this. We also talk about how we built the LLM product. We talk about our Series B fundraise. So that's journal entries on Substack. That's a great place to find Anrok content as well.
Oh, beautiful. So that's the name of the Substack's journal entries.
That's right.
Oh, I love that. I love that. And your website, right, is anrok.com, correct?
That's right.
All right. Well, everyone, Michelle, really appreciate your time sharing your journey. Listeners, if you'd like to learn more about Michelle and Anrok, check out anrok.com and check out journal entries on Substack. And of course, check out Anrok on LinkedIn. And again, Michelle, really appreciate your time today.
Likewise. Thanks, Ben.